Hey, Steve Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask you to hit thumbs up and subscribe. Questions, comments, put those below. Since I started this YouTube channel, over 6 years ago, I have yet to miss a weekly Saturday video. So wasn't going to let this one be the first. Just here on vacation in Maui. But I want to get this brief video out to you guys this week because I think it's important to I want to highlight some sort of commentary here from the Bank of Canada as usual, but as well as want to do a sort of a little quick analysis on an update sort of on the Canadian Vancouver housing market landscape. Just finished writing up my monthly Saretsky report on my way over here on the airplane, so kind of want to do a quick touch on that as well. But we're getting a lot of pushback on the whole interest rate hike narrative. Like I said, I think that central bankers essentially are politicians as the sort of custodians of the fiat currency. They have to always emit this level of confidence that they are in fact in control. And again, they'll say kind of what they need to say. And I want to remind people really what Tiff Macklem said to Canadians actually September of 2020, when he suggested that the recent activity in the housing market was simply a case of pent-up demand. So let's clip that into Tiff Macklem right here.
They're all used, but as I've described it, real estate in the city of Vancouver is the perfect money laundering vehicle because underground banking and organized crime captured the high end of the market. A home, another brief example, you buy what's called a Vancouver Special, an old rundown home on a big lot in East Vancouver for, let's say, $2 million. You've done it through this casino money laundering scheme. You knock it down. You then take out more drug cash loans from these very same Triad and Loan Shark networks, renovate this property up to a mansion. Quickly, it becomes worth $5 million. 10 million, as year after year, this underground banking scheme, the Vancouver model, is used not only to launder money, but to drive home prices up in speculation. Because the first thing to understand is when you're a money launderer, you don't care what you pay. In fact, you want to pay more. But then once, you acquire more and more properties and pour more and more drug cash into them, speculation becomes a part of the play as well as money laundering.
Now I want to bring you to this chart here because since those comments from Tiff Macklem in September of 2020, just over a year ago, so from September 2020 to in fact September 2021, national home prices jumped 21.5%. So when he was out there telling you that there was nothing to be concerned about, that this was all transitory or just a case of pent-up demand, national home prices ripped, and actually they inflated at their fastest pace of acceleration ever, up 21.5% in those 12 months following that speech. So you'll have to sort of forgive me when I have a lack of faith or lack of confidence in their abilities to actually follow through on what they're going to tell you that they're going to do, which is, hey, we're going to fight inflation when again, really just look at the debt to GDP ratios and say, okay, you can try to fight inflation, but good luck with it. And in fact, I want to kind of steer you now to this chart, which sort of helps formulate a lot of my thought process. Again, my thought process could very well be wrong. I am certainly not accurate in every sort of call that I make, but I try to sort of provide at least have a framework where I can sort of do my own thinking. When I look here, I look at the Canada's residential investment as a percentage of GDP is now about 10% of nominal GDP, and in fact, it's now 4 standard deviations, greater than the long-term average, right? So that's kind of Canada's resilience on the housing market. And it's kind of ironic because just this past week, which we actually just discussed in the recent episode of the Looney Hour, that, Justin Trudeau, for example, the Liberal government, whoever the government is, doesn't really matter. But, the government came out this past week and saying, hey, we're going to basically put all these curbs and controls on the oil and gas, the energy sector in Canada, which... okay, well, if you're going to start to, crush investment in that sector, what's left? Are you planning to triple and quadruple down on housing? And so they're going to be stuck in a very difficult spot because, the energy sector, as we talked again about in the Looney Hour, is about 25% of Canada's GDP, which really is equivalent to what the fire sector is, which is the finance, the insurance, the real estate sector in Canada is about 25% of GDP. So oil is about as important as real estate is. So again, if you're going to curb investment in the energy sector, and then simultaneously, okay, if the central bank says, hey, we're actually going to raise rates because we think housing is too expensive and we're going to crush housing, you don't have a whole lot left. So that's something that, you kind of read between the lines of what these people say, and then, you can kind of formulate your own decisions and your own opinions. But I want to touch now, shifting gears kind of again onto the whole housing sector, because don't get me wrong, I think that we're entering a period of volatility. I think that central banks are grappling with inflation challenges. I think that they're going to try to at least raise interest rates, at least once or twice to show them the markets, like, hey, we were serious, like we have to actually do something. They can't sit there and like not do anything. So they'll have to at least raise, once or twice. But I'm not necessarily that confident they're going to get very far. Again, that's at least my view. But I do think that's going to create some volatility, and because what happens is if we start to see a backup in interest rates, in bond yields, which vis-a-vis flows through into the mortgage market, right? I mean, at the end of the day, all you have to do is track the 5-year Canada government bond yield, which will basically tell you where 5-year fixed mortgage rates are going, which is obviously a very, very important pricing mechanism for not only housing, but the Canadian economy. So we have a situation now where we know 5-year bond yields are backing up. The 5-year fixed mortgage is now about 2.5%. I've always said if this thing clips north of 3% in today's levered, housing market, that's going to result in my opinion, a significant size slowdown. And all I say is all you have to do is go back and look at 2018. 5-year mortgage rates in Canada hit 3.5%. Everybody thought that they were going to 4%, and housing slowed down. And Steve says, everybody goes, housing didn't really slow down. No, it did. I mean, I work in the market on a day-to-day basis. Housing slowed. In fact, if you look at it from a statistical standpoint, in 2018, in the greater Vancouver housing market, in 2018, for the entire year of 2018, greater Vancouver home sales fell to a 20-year low. So 2018 was a 20-year low for greater Vancouver home sales. Because again, mortgage rates in a highly levered housing sector hit 3.5%, and the housing market slowed down. And in fact, for portions of the segment, if you were selling real estate as a seller, you were looking at a 5 to 10% discount. You were selling at a discount in 2018, and that shouldn't be surprising when sales fall to 20-year lows that you were having to sell for slightly less than you would have the year before. So keep that in mind as we watch, how the bond market plays out and how we watch central bankers grapple with inflation, because I think it's going to be an important story moving forward. Now I want to quickly touch on Vancouver. The sort of the headline, so to speak, was home sales falling 5% on a year-over-year basis. Again, basically coming off record lows from record highs from last October. So if you actually start looking past the headline, so you had sales off 5%, but you had new listings coming off about 32%. So you had sales falling off significantly more than sales. And in fact, if we look at the chart here of standing inventory, so how much inventory is for sale as of the end of October 31st, it was the lowest inventory levels across the entire segment, across all of Greater Vancouver, in at least a decade. So as of right now, you have a 10-year low in standing inventory. Of course, if we start to unpack that a little bit further, we can start to see that there's pockets of the market that are performing a little bit different. And this is why I always say, like, real estate ultimately is hyper local. What's happening in suburban single family houses is not the same as what's happening in downtown condo markets. And so, real estate is hyper local. In fact, if we look at what's happening in the detached housing market, we know that's where most of the strength is. The number of new listings in the single family market came in at a 20-year low. As of right now, if you're looking for a single family house, under $2 million, the months of inventory is 1.3. So you're sitting at 1.3 months of inventory for sale. It's the lowest we've ever seen. So again, even if sales are coming off, if you have 1.3 months of inventory, that's going to put upwards pressure on prices, and that's what we continue to see in the detached segment market. Now, again, I agree with probably everybody watching this. This is clearly not sustainable. At some point, we'll start to see sales continue to slow. New listings will eventually come on. That won't happen until at least the spring market, because we're entering now a phase where November, December, January are the three slowest months in terms of new listings coming to market, as people sort of put their plans on hold for the holidays. So we'll start to see the resurgence of the spring market, so to speak, which starts ultimately in February. So that's going to be important. So if you're looking for a detached house to buy today, I mean, honestly, you may as well just hit the pause button and check back in mid-February. Now, if you go into the condo segment, for example, we had record condo sales in the month of October. That looks like it's slowly starting to follow. Looks like it's slowly starting to follow the rest of the market, right? Similar to 2016, 2017, you had the detached market went up, the townhouse market followed, and basically as people got priced out of everything else, the rising tide lifts all boats, so to speak, and people flowed into the condo market, right? You'll remember 2016, the detached housing market peaked. Only in 2017, the condo markets went up 20% following that. So something I'm keeping an eye on, not as bullish in the condo market, just because I think we do have a lot of new construction supply that is in the pipeline, that is completing. So I don't think you're going to have the same sort of inventory challenges that you do in the single family housing market. But again, people always ask me, okay, this is something that I highlighted in my report, which I kind of want to cap things off with here. But people always ask me, hey, is it now a good time to buy? Should I be buying? And I always say I don't like giving blanket advice. It really depends on where you are in your life circumstances. What are you buying? And this is something that I highlighted in my report, because I want to show the sort of the aberrations, so to speak, in the housing market, the concerning levels of activity, right? So if you're looking, for example, a single family house, if you're looking for a house in the suburbs, I mean, maybe not the best time to be buying. Now, I mean, you've got Chilliwack single family house prices up 52% year over year, Abbotsford 38%, Langley 33%, Surrey 33%, Maple Ridge 33%. I mean, they've already moved 30+% over the past 12 months. Could they move higher because of months of inventory? Sure. But I think that you're reaching these obviously frothy levels. You're probably right for a pullback in the next 12 to 18 months. Now if we flip gears, I mean, if you're looking at the downtown Vancouver condo market, it hasn't moved since 2017, 2018. You're actually probably still technically underwater from 2017-18. Condo prices on a year-over-year basis are up 2%. So if you're like I said, markets are very hyper localized, and I think that just to kind of summarize this video, and if you want to know why real estate markets are so hyper localized, I think you look no further than the failure that we're seeing this week coming out of Zillow, which is something I've highlighted before, I think in these videos, but definitely on Twitter. Basically, Zillow had an iBuyer program where they were trying to flip properties. They were trying to basically flip properties at mass, at scale, using computer algorithms. But the problem is that flipping is not an easy game. Real estate markets, again, are hyper local, and you're trying to have a computer algorithm. Basically, Zillow was losing, I think they lost about $500 million just in the last quarter alone on basically property flipping in the midst of the biggest bull market that U.S. housing has seen since the global financial crisis. So talk about a huge miss. And as someone myself that has personally, flipped properties, I can tell you it's not an easy. It's not an easy game. I mean, if it was, everybody would be doing it. Everybody would just quit their job and start flipping houses. I mean, sure, it makes it a lot easier when the market goes up 30% in a year. But as we can clearly see, real estate markets are hyper local. And this is clearly what we're seeing in the Vancouver market, where again you got the suburban single family houses up 30+%, and you've got condo markets in the inner city haven't moved. So anyways, I'm gonna leave it there. I will probably be doing, actually I'll be here next week as well, so we'll the next week's video will be filmed part 2 in Maui. See you next week.